Imagine you saved for 6 years. Every month, you skipped the vacations, cut back on eating out, said no to 100 small things that your friends were saying yes to, and finally, you have enough for a down payment on your first home. You start looking, you find something you like, you run the numbers, and then you realize the monthly EMI on that house would eat up 60% of your salary. You do the math again. You think you made an error. You didn't. So you wait. You tell yourself prices will come down. They've been going crazy for a while now. This can't last. And then a year later, you check again, and prices are even higher. What is going on? Because from the outside, the housing market right now looks completely insane. Prices that don't make sense, interest rates that make your head spin, and yet somehow people are still buying. And somehow people who desperately want to buy can't. Today, we're going to break down exactly what happened, not in complicated economic language, but in simple human terms. Because once you understand the forces that are driving this market, you'll stop feeling confused and start making smarter decisions about where you stand. Here's what most people believe about housing prices. They think it works like a simple supply and demand equation. If too many people want houses and not enough houses exist, prices go up. If prices go up too much, people stop buying. Demand falls, prices come back down, balance is restored. It sounds logical. It sounds like how markets are supposed to work. But the housing market doesn't behave like a normal market. And that's exactly why so many people, smart, well-earning, financially responsible people, feel completely shut out. Here's the thing nobody really tells you. The housing market isn't just driven by people who need homes. It's driven by people who see homes as investments, and those are two very different motivations. One group is looking for a place to live, the other group is looking for a return. And when those two groups compete for the same limited inventory, the person who just wants a roof over their head usually loses. Let's go back and understand how we got here. For most of history, buying a home was a straightforward transaction. You earned money, you saved, you bought a house, you lived in it. The house appreciated slowly over time, maybe 5 to 7% a year, and when you eventually sold it, you made a decent profit. It wasn't glamorous. It was just a stable, long-term asset. Then something shifted. In the years following the 2008 financial crisis, central banks around the world, including in India, kept interest rates extremely low. The idea was simple. Cheap money encourages borrowing. Borrowing stimulates the economy. The economy recovers. And it worked. Sort of. But it also had a side effect that nobody fully anticipated. When interest rates are low, home loans become very affordable. Your EMI on a 50 lakh loan at 7% is very different from your EMI at 9.5%. Suddenly, buying a bigger home or a second home didn't seem that scary. So what happened? More people entered the market. Not just people who needed homes, investors, people who saw that real estate prices were rising and wanted in on the action. Large developers, wealthy families diversifying their portfolios. And here's where psychology enters the picture. There's a concept in behavioral economics called the fear of missing out, FOMO. And real estate is perhaps the single most powerful FOMO asset that exists. Why? Because unlike stocks, a house is visible. Your neighbor buys a flat in a new project. You watch it appreciate by 40% in 3 years. You feel it. You can point at it. You can almost touch the money that person made. And that feeling, that physical, visible proof that someone else got rich, triggers something deep in our brains. It makes us want to jump in. It makes us feel like if we don't buy now, we'll be left behind forever. So demand spiked. And here's the part that made everything worse. Supply couldn't keep up. Building homes takes time. Land in cities is finite. Approvals take years. Infrastructure has to be developed. You can't print houses the way central banks print money. So while demand was rising fast, supply was moving at the same slow pace it always has. The result? A gap. A growing, persistent gap between how many people want homes and how many homes actually exist. And into that gap, prices rushed upward. Now add one more layer. After the pandemic, something extraordinary happened to where people wanted to live. Remote work changed everything. People started leaving expensive city centers and looking at mid-sized cities, suburbs, and areas that were previously considered not prime. Suddenly, markets that were quiet for decades started heating up.
Cities like Pune, Hyderabad, and Bangalore saw demand explode. Even Tier 2 cities started getting attention from buyers who could now work from anywhere. So now you had demand spreading across more geographies, supply still struggling to catch up, and investors piling in on top of end users. It was like multiple fires starting at the same time. Here's the deeper truth that most people miss when they talk about the housing market. We tend to think about housing as one single thing, but it's actually two things happening simultaneously, and they often move in opposite directions. There's the housing you need, the home you live in, the roof over your head, the neighborhood where your kids go to school. And there's the housing you invest in, the second property, the rental unit, the plot you're holding for appreciation. And when those two worlds merge into one market, the person who needs a home is always at a disadvantage because the investor doesn't need to live there. They can wait, they can hold, they can absorb a downturn without losing their shelter. But the person who needs a home, they have a deadline, they have a family, they have urgency, and urgency always costs you money. There's also something called the wealth effect at play here. When property prices rise, people who already own homes feel wealthier, even if they haven't sold anything, even if the money is entirely on paper. That feeling of being wealthier makes them more confident. They spend more, they borrow more, they invest more, and this confidence pumps more money into the economy and back into the housing market. But for someone who doesn't own a home yet, the exact same price rise makes them feel poorer, like the goalpost keeps moving, like they're running on a treadmill. This is one of the most powerful and underappreciated ways that wealth compounds for some and shrinks for others. Not because of effort, not because of intelligence, but simply because of timing and access. The people who bought homes 10 years ago didn't necessarily make smarter decisions. They just happened to be at the right point in the cycle, with the right access to credit at the right time. So, what do you actually do with all of this information? First, stop waiting for a crash that may never come the way you expect it to. Every year for the last decade, someone has predicted that the housing market will collapse, and every year in most major Indian cities, prices have either held steady or gone higher. That doesn't mean a correction is impossible, but it does mean that waiting for the crash is not a strategy, it's a wish. Second, understand the difference between buying to live and buying to invest. These are not the same decision and should not be evaluated the same way. If you're buying a home to live in for the next 15 to 20 years, the question isn't whether prices will go up or down in the short term. The question is whether you can afford the EMI comfortably today and whether the location genuinely improves your quality of life. A home you live in is not an investment. It's a lifestyle asset. Treat it that way. Third, if you're looking to invest in real estate without buying a physical property, explore REITs, real estate investment trusts. These are instruments that allow you to invest in large commercial properties, office parks, malls, warehouses, with as little as a few thousand rupees. You earn rental income and benefit from appreciation without the headaches of ownership, maintenance, or a massive upfront commitment. They're still underdiscovered by most retail investors in India and worth understanding. Fourth, don't let FOMO drive a decision that will affect your finances for the next 20 years. The single most dangerous thing you can do in any overheated market is buy something you can't afford simply because everyone around you seems to be buying. That's not wealth building. That's social pressure wearing a financial costume. And finally, if home ownership is genuinely your goal, the most powerful thing you can do right now is not to find the perfect property. It's to obsessively protect and grow your down payment. Keep it in instruments that beat inflation, high-yield debt funds, liquid funds, fixed deposits, depending on your timeline. The bigger your down payment, the smaller your loan, the lower your EMI, the less you're at the mercy of whatever interest rates decide to do next. Here's the thought I want to leave you with. The housing market didn't go crazy randomly. It went crazy because millions of rational people, each making individually logical decisions, collectively created a situation that feels irrational from the outside. Investors chasing returns, young couples afraid of being priced out forever, developers maximizing profit, banks deploying capital, government policies trying to stimulate growth. Every single one of those decisions made sense in isolation, but together, they created a market where the people who need homes the most often have the least power to afford them. That's not unique to real estate. It's how almost every financial market works. And the people who consistently build wealth aren't the ones who found some secret shortcut. They're the ones who understood the forces in play and made decisions based on logic instead of fear. The housing market is complicated, but you don't have to be confused by it. You just have to understand whose game it is and decide how you want to play it.